All I need is $1 million or a new loan and everything's going to be perfectly fine. I'm telling you now, it's not. My name is Scott Peper. I'm the CEO of Mobilization Funding and one of the co-founders. For the last 10 years, I've been working with construction businesses and other small businesses, helping them optimize their cash flow. Usually that's in the form of a loan, but it's also in the form of helping people just find better ways through content and creations and project tools to maximize their cash flow, gain the efficiencies they need to, track and monetize the right things, monitor the different departments in their groups. And what we've learned now is that maximizing the efficiency of your cash flow is not a short-term fix. It's a long-term process that takes little baby steps. Yes, you might need an injection of cash, but it's not necessary, and stop rushing. The first critical step is to optimize the cash flow you have. So let's talk about that for a second. One, the best form of credit you can possibly get is from your vendors. That's your suppliers. That's subcontract labor. If everyone on the earth let you pay them when you were paid, you'd be in a much better spot. So the first place to start is who will let you pay them or let you borrow that from them in the form of material or labor so that you can pay them when you're actually paid. That's the easiest and best way for you to actually help gain some cash flow, relieve some cash flow stress, and gain some cash flow efficiencies. The second best way is, what access to capital do you have? Not only the profit that's in your business, and we'll talk about that maybe more in a later video, but keeping the profit in your business is going to help you, give you the ability and options that you may not otherwise have if you keep pulling all the cash out or spending it on even capital expenditures like trucks and equipment or other things. There are the right times to lease and there's the right times to finance. So let's optimize those. Perhaps you own a bunch of equipment. Well, you know what? If you own a bunch of equipment, but then you need cash to execute on projects, or you're looking for loans to execute on projects, your better option might be to actually put some debt on your equipment, because you could do that at a much lower cost of capital. So these are the types of things that we're talking about when it comes to optimizing. Another way to optimize cash flow is to use cash flow tools. That means let's get your finance department or whoever manages and monitors your books, let's get them in touch with your purchasing department, your project managers. They need to communicate. If they're communicating and ordering material at the right time and in line with when you actually have excess cash, and your accounting department or your finance team is actually letting your project management team know where they are to budget, when they should order materials, the right time, and they're keeping track of the schedules, you won't use up all your cash in the wrong ways and put yourself in a cash flow hole. And lastly, for optimizing cash flow, you should have a cash flow tool, some type of report, and a tool to use for each and every individual project. Knowing your project cash flow or cash flow by customer, if you're not a construction business, is really important, because you want to know what your cost of cash is for each individual customer or each individual project. And then you want to aggregate all those together so that as a business owner or a leader or a manager of a team, you can actually understand where the cash flow is from an overall perspective, but how each individual customer or project is contributing to your cash or taking away from your cash. And that way you can monitor it from an individual perspective, project by project, and also overall aggregated. Second, let's talk about financing options. So there's a lot of ways to finance projects. There's a lot of ways to finance your business. There's a lot of ways to finance equipment, capital, in terms of capital expenditures, your trucks, maybe it's new office furniture, maybe it's a building. So you have SBA loans, and there's a whole nother video we have on our YouTube channel that talks about the difference between SBA loans, factoring, merchant cash advances, loan programs like ours at Mobilization Funding, or other project-related funding sources, including equity. Whether you want to raise equity, do you want to sell part of your business, should you bring in a new partner? All of those things have their advantages and disadvantages, but what's most important is to get the right form of capital for what your specific business needs, number one. Number two, what your business needs based on the problems that you're feeling from a cash flow perspective. If you have a cash flow problem on every single project, raising equity or bringing in a partner to buy parts of your business might not help you. It might be because you're not bidding it properly, or you're not making the money you think you're making, or you don't have the right cash expense periods to when you're actually collecting your revenue. And that's what's causing you cash flow stress. Bringing in equity, all that's going to do is just push that problem down the road a little bit, but never actually fix it. And then you've just wasted a bunch of cash and you've sold parts of your business. What's most important about exploring the different financing options is find someone that can help you. Someone that's truly invested in understanding your business that can help you navigate through the different types of financing. Just because your friend got an SBA loan and that was good for them doesn't mean it's good for you. Just because your other friend uses a factoring company doesn't mean it's good for you. Just because one of your friends uses mobilization funding, it might not mean it's best for you. So find somebody that you can trust that understands cash flow, your business, and they can take that journey with you and help really guide you through it. What's most important is that you don't rush. Don't take drastic measures. Don't put yourself in a worse situation just because you're in such a bad situation right now, even if you're feeling it week to week. That's exactly how people end up in the worst possible scenarios. And what happens is they take a small problem that has certainly an impactful feeling of negativity to it, and they create this way bigger problem that's even harder to gauge. So do not take drastic measures. That is the number one takeaway that I can tell you right now from this video. Don't take drastic measures and just bring in cash just to make yourself feel better for the moment. Please, don't do that. Maximizing your efficiencies is the next key ingredient to this process. And what that means is coordinate the right meetings. Let's get those departments talking to each other. You lead the teams. You bring the teams together. You guide them on what they need to be communicating on. And guess what? You're not supposed to know what all that is. And if you don't, bring in some experts to help you guide that. There's plenty of great people out there. There's tons of free content. There's great books. And if you don't want to educate yourself and get all that information, there's people that you can find, whether it's online through different social channels or other people you know that can come in and actually help you set you up with that. Use the professional services you already have, like your accountants, like your lawyers. Find those groups or your bankers that can help come in and help guide you on what types of meetings you should be having, what departments they should be talking to who, the frequency of those meetings, the topics, the reports, the processes, the systems that you should be creating off of that. Once you do that, it's much easier for you to make decisions when you have with a table set in front of you and you know exactly what you want to do. Lastly, and in conclusion, don't take drastic measures just to boost your working capital. Oftentimes I've heard people say, if I just had $1 million in cash injection, I'd be fine. And the truth is, you're not. You wouldn't be. It would feel better. You'd feel much better than fine for the moment. But there's nothing worse than bringing in $1 million or bringing in a couple $100,000 or whatever the number is you need, and all of a sudden it's not there and you have the same problems because you spent it. What's critical is analyzing your business, getting the help you need to analyze it if you don't know how, understanding where your contributions of cash flow are coming from. And what you'll see is that you're going to sleep better at night, you're going to make better payroll, you're going to make your payroll without rushing around, you're not going to spend all week chasing down the people that owe you money from your customers and bothering them and asking for them to pay early or taking discounts. And what you'll do is you'll end up having a much more streamlined business that allows you to sit up on top of the business, making decisions for the betterment of you and your team, your employees and your family and their families. And you'll be able to sleep much better at night. And it's the cash flow efficiencies that are going to make you feel better or worse. It's not the profit you have on paper. You need profit, but it's not the profit you have on paper or in your bids or in your estimates. It's not the cash sitting in your bank account that's going to make you feel better. It's these systems and processes and the information that's coming to you. So don't make drastic decisions. If you like this video, please take a moment to put any questions or comments in this section. And don't forget to subscribe. Thank you guys very much. God bless you.